Welcome to the Massachusetts Department of Unemployment Assistance presentation about the WorkShare program. This presentation covers the following topics: an overview of the Massachusetts WorkShare program, details of a WorkShare plan, how WorkShare impacts workers, WorkShare information audit, rules for WorkShare such as reasons for denial, reporting employees' employment for non-WorkShare employers, etc. Online resources such as where to find more details, how to log in and apply for WorkShare in UI Online. We'll show the screen you'll use to apply and participate in WorkShare. We'll also cover future enhancements. The United States Department of Labor refers to the WorkShare program as the Short-Time Compensation Program. The program is voluntary, and individual states may choose to participate or not. It's also voluntary for individual employees to participate. What is WorkShare? The WorkShare program allows an employer to reduce the hours of work for employees in lieu of temporary or permanent layoffs for a department or an entire company because of a decline in business. WorkShare allows affected employees to receive UI benefits to supplement their reduced wages. How does WorkShare benefit employers? The WorkShare program benefits employers in several ways. It allows employers to keep skilled workers. By doing that, it helps to avoid disruption in business operations. It also helps to reduce future hiring and associated retraining costs. WorkShare helps to maintain worker productivity and to remain prepared for future business growth. The biggest reason employers say they want to participate in the program is so they can keep their skilled, trained workforce. Employers do not want to have to go through the process of hiring and training new staff. They benefit from WorkShare by being able to keep their business operational and productive, even if it is at a reduced work schedule. When business improves, they can resume full operations with their skilled workforce intact. Details of a WorkShare plan. Employers can have multiple WorkShare plans. Plans can range from 10% to 60% in a reduced work schedule. Plans are based on a 40-hour per week work schedule. Employers can have multiple plans at different percentage reductions depending on the affected unit or department, with a minimum of 2 affected employees per plan. All employees within a WorkShare plan must have their work hours reduced by the same percentage. WorkShare is flexible, so employers are not restricted to one plan. They can have as many plans as they require. Plans can be at different percentages depending on the slowness of a unit or department. Currently, a WorkShare plan may be a maximum of 26 weeks. If an employer creates a plan for less than 26 weeks and later wants to extend it, they must notify the WorkShare unit before the plan expiration date so that the end date can be modified. Once a WorkShare plan is approved and an effective start date set, all affected employees will file their own unemployment claims. A WorkShare plan is for a set period of time. The WorkShare week always begins on a Sunday and ends on a Saturday. If an employer wants to extend a plan longer, more than 26 weeks, then at that time a new plan will have to be filed. The employee, not the employer, will need to file their own claim the week the plan is effective. Employers will request WorkShare benefits on a weekly basis for all workers in each plan. In addition, employers must report non-WorkShare employment for employees who have additional employment at the time the employer requests WorkShare benefits each week. WorkShare allows for 2 weeks of a complete company shutdown during a plan. Employees may be eligible for a full UI benefit payment for those weeks of a complete company shutdown. With an approved plan, the employer's administrator will log in each week through DUA Revenue Portal to request WorkShare benefits for their workers. If workers have a second job, this information and the dollar amount earned there each week needs to be reported by the WorkShare employer when requesting WorkShare benefits. Shutdown dates can be reported when an employer is initially applying for WorkShare or during the course of the plan, as long as there is a 2 to 3 day notice prior to the shutdown week. Permanent part-time employees can be included in a WorkShare plan. Temporary employees cannot be included in a WorkShare plan. Seasonal employees cannot be included in a WorkShare plan. A WorkShare employer must be a qualified employer, meaning in compliance by DUA standards. Employers are checked for DUA compliance. The employer must give employees the non-work-sharing employer low earnings report each week when the claimant has additional earnings outside of the WorkShare employer. Employers may create their own non-WorkShare earnings report. This is the form that workers with additional employment submit to their employer each week. The employer enters the dollar amount when reporting the hours the employee worked in the plan. And again, they can create their own report, but it must contain all the information that is listed on the original form. Employees can earn up to 30% of the current maximum unemployment weekly benefit amount from their non-WorkShare employer before deductions are taken on their WorkShare claim. The 30% disregard applies to all WorkShare employees regardless of their own weekly benefit amount. Employees must report their partial earnings from the non-WorkShare employment every week they claim UI benefits under the WorkShare plan. If the non-WorkShare earnings are not reported when they occur, the failure to report earnings could result in an overpayment. Each week, employers access a screen called Weekly WorkShare Claim-Employer. This screen is where employers data enter the plan hours for each employee. There are 3 data fields: WorkShare hours worked, leave hours, and additional earnings for the dollar amount earned by additional non-WorkShare employment. It should be noted that the leave hours field may be modified to accommodate special situations. How WorkShare impacts workers. WorkShare is a voluntary program, so participation is not mandatory. However, workers who choose to participate will continue to receive wages equal to the number of hours they work each week. They will retain the same defined health benefits under the same terms as though their work week was not reduced, and they will retain the same defined retirement benefits under the same terms as though their work week was not reduced. Employees who choose not to participate in WorkShare will still retain the defined health and retirement benefits. They'll just not receive any unemployment benefits associated with WorkShare. Here is a list of employee responsibilities for those participating in WorkShare. First, the employee must file an initial unemployment claim or reopen an existing claim the week the plan goes into effect. When filing the initial claim, the employee must report all employers for whom he worked in the prior 15 months. Employees must work the number of reduced hours each week stipulated in the plan. Vacation and sick hours can be used to supplement the number of hours required. If working for an additional non-work-sharing employer or employers, the employee is required to report those earnings to the WorkShare employer, who will then be able to declare the earnings for any week UI WorkShare benefits are requested. The most important responsibility that the employee has once they have agreed to be in a plan is to file their claim the week they are instructed to do so. WorkShare benefits are paid with paper checks unless there is a week the company has a complete shutdown. Then the payment method would be either a debit card or a direct deposit. Once the WorkShare plan is approved and employees have filed claims, they receive WorkShare information in their inbox on UI Online or by mail, informing them of the specifics of their plan. WorkShare benefits will continue to be paid with paper checks as long as they are on the program. Once claims are filed, WorkShare claimants are notified by DUA that they are in an approved plan. Here is a sample of a WorkShare message to a WorkShare employee. The message summarizes what the claimant can expect, including a general statement of the benefit amount in relation to what a full benefit would be. This particular plan is for a 20% reduction, the equivalent of 1 day, so the regular weekly benefit amount will be reduced by 80%. The statement also includes information about what's expected if there's a company shutdown, how to request benefits, what happens if the WorkShare plan is discontinued, and how to get questions answered. If a plan is discontinued or revoked, WorkShare claimants receive notice of such a change in the form of a termination letter. Your employer has decided to end its WorkShare plan. This means you will no longer be eligible to receive WorkShare unemployment benefits. If you have questions about why the plan is being canceled, please contact your employer directly. If you have questions about your unemployment benefits, please contact the DUA WorkShare unit at 617-626-5521. Effective the quarter beginning April 1st, 2015, the DUA Revenue Audit Unit will select 2 WorkShare companies per quarter for an audit to monitor their WorkShare plan and payments. These companies are selected at random, and the WorkShare audit section is included with a regular DUA revenue audit of the company. Recent law changes to Massachusetts General Laws, Chapter 151A, Section 29D, Unemployment Insurance, resulted in the requirement to audit WorkShare plans. To ensure compliance, DUA revenue staff will be auditing WorkShare plans, checking that employers, 1, continue to provide health benefits to employees in affected units as if still on a full-time work schedule, 2, continue to provide retirement benefits to employees in affected units as if still on a full-time work schedule, and 3, monitor and report partial earnings for employees who have additional employment with non-WorkShare employers. DUA revenue audit screens will capture the following details. Is the company's experience rating correct? Were issued WorkShare payments accurate? Were any overpayments discovered in the course of the audit? Were productivity standards changed for employees as a result of being on a WorkShare plan? Did WorkShare employers and employees indicate the WorkShare plan was successful? These law changes help ensure more accurate reporting of the WorkShare program for both the employer and DUA. Employers applying for WorkShare will be denied via a non-appealable determination if the company has a union and the union approval for WorkShare is not returned, if the company only has 1 participant in a plan, or if the company refuses to reduce the hours by the same percentage for all workers within the same WorkShare plan. Employers that fail to comply with the basic WorkShare requirements of not returning all requested forms, inadequate number of plan participants, or equitable hours reduction are all subject to denial by DUA. Employers will not be able to complete their WorkShare application for the following reasons. If the company has a negative account reserve balance from their last experience rate notice, or if the company has failed to file employment and wage detail reports for every quarter, or if the company has a delinquent account due to debt owed to DUA for unpaid unemployment taxes. WorkShare applications are filed online through the DUA revenue portal and must pass specific requirements to complete and submit the application. These new requirements are part of the law changes that occurred to Mass General Law, Chapter 151A, Section 29D. WorkShare changes made effective March 24, 2015. Employers that are trying to file for WorkShare and receive a screen displaying WorkShare ineligible negative reserve balance can conclude that their unemployment experience rate exceeds an acceptable level to apply for WorkShare. Employers receiving this message about a negative account reserve should contact DUA Revenue immediately for clarification on their account. An employer denied a WorkShare plan due to a negative account reserve balance will not be able to reapply for WorkShare until their UI experience rate is reset the following January. If a company's reserve balance remains negative, they have the opportunity to pay the reserve balance and change their status to positive. Detailed information about this process is on the employer's experience rate notice. Employers that are denied because of a negative account reserve should investigate their options with DUA Revenue. Employers are allowed a specified grace period to pay any outstanding balance. The date for this time frame is on the experience rate notice. If the balance is paid within the grace period, the employer will become eligible to apply for WorkShare and may see its annual experience rate percentage reduced. The grace period is usually a 30-day period. Here is an example of an experience rate notice. When applying for WorkShare, if the WorkShare ineligible delinquent account message appears, the employer's account is delinquent. The employer must pay in full all amounts due before initiating a WorkShare plan. Employers can view all outstanding charges by clicking the link provided in the message window. If an employer is delinquent in paying their UI taxes, or if the employer has not filed all the required quarterly employment and wage detail reports, participation in WorkShare is still possible if 1. The account is paid up to date and any missing employment and wage detail reports are filed, and 2. The employer account has a positive account reserve balance. If an employer is delinquent but has a positive account reserve balance and then pays all monies owed, they may be eligible for WorkShare. An employer who wishes to apply for the WorkShare program first needs to log into UI Online. This is done by going to the Labor and Workforce Development homepage and clicking the Employers and Agents button. Next, the designated company administrator or agent logs into the DUA account using their user ID and password. For purposes of authentication, the password is considered the same as a signature. Once logged in, the employer account homepage appears. The administrator then selects the account maintenance hyperlink. The employer account maintenance screen now appears with a selection of various functions. Request WorkShare Benefits hyperlink is then selected to create or modify a WorkShare plan. Then the Employer WorkShare screen appears. This screen contains a button for an employer to add or create a plan and another button to modify or update a plan. This screen is also used by an employer to search existing, past, and current plans. The plan status field has a drop-down menu which is used to search for the following types of plans. Closed, meaning past the end date, denied, discontinued, DUA staff is working on, employer is working on, revoked, withdrawn, or approved or active. The screen also allows an employer to add or modify a plan. By searching for plans, employers can see a history of all their WorkShare plans. This screen includes plan numbers, affected group name, plan create date, effective dates of plan, and the status of each plan. The status of the first plan is closed plan past end date, meaning it is expired. The second plan is a revoked plan, which indicates non-compliance with plan regulations. The third plan is a withdrawn plan, meaning the employer withdrew the plan before completing it. The fourth plan is an approved or active plan, meaning it is currently in use. By clicking the Select button, an employer can access a specific plan to view its information. This screen is displayed if an employer has met DUA eligibility requirements. The screen explains the specifics of the WorkShare program, such as employers that have used the WorkShare plan successfully have a number of things in common. They have a recovery plan to meet the conditions that led them to possible layoffs. They have a skilled workforce that is important to their future growth. They are committed to maintaining a permanent workforce. They can commit to a weekly reduction in work hours for the affected units. In order to complete the WorkShare application, you will need to provide the effective begin date of your WorkShare plan. It must be a Sunday date. The effective end date of your WorkShare plan must be a Saturday date. The planned percentage reduction in weekly hours, union information if applicable, participating employees' names, Social Security numbers, and regular weekly hours. WorkShare plan requirements. In order to be approved by the Massachusetts Division of Unemployment Assistance, an employer must submit a WorkShare plan that specifies 2 or more employees whose regular full-time hours will be reduced at least 10%, but no more than 60%. Specifies plan effective begin date, which is a Sunday of the first week employees' hours will be reduced. Plan must specify the effective begin date and effective end date. The effective end date must be a Saturday that cannot be more than 26 weeks from the effective begin date. Certify that health insurance benefits will remain the same, and certify the determined retirement benefits. There is more information about WorkShare, and if the employer decides to apply, they should click Next at the bottom of the screen. The WorkShare application screen is then displayed. The WorkShare application is complete when the system displays the WorkShare plan confirmation screen with new plan numbers, which we'll see in one of the next slides. On this screen, the employer inputs the Social Security number, first and last name of each employee that will be in the plan, as well as their customary work hours, and the new reduced work hours under WorkShare. After selecting Next, the employer will see a display screen that confirms the submission of the application. In this case, the union approval form is required. This screen also shows the new WorkShare plan number. This is an example of the WorkShare non-compliant claimant screen. This screen displays a WorkShare company in which all the workers in the plan are out of compliance for the week. The first employee listed, Joe Smith, is supposed to work 28 hours, but he only worked 24. This example shows either excess hours or an insufficient amount of hours required for the week. In this instance, no one would be getting paid a WorkShare check. Under a WorkShare grant from the U.S. Department of Labor, DUA is working on a series of enhancements and improvements to the WorkShare program, including removal of system-generated 3-week waiting period for approval of a WorkShare plan, changing the effective period of a WorkShare plan from 26 weeks to 52 weeks. The WorkShare screen will be redesigned with 2 icons to make it easier for employers to create and modify a plan and to request WorkShare benefits for workers. Also added will be additional messaging to employers after a withdrawal of a WorkShare plan verifying the transaction. In the coming months, the WorkShare program will undergo these system enhancements, which will make it easier and faster for employers to apply for WorkShare. Future enhancements for WorkShare employees will include modify initial reopen claim process by creating new correspondence that will be sent to claimants explaining requirements they need to follow to continue to be eligible for WorkShare benefits. New system functionality so claimants can submit partial earnings for non-WorkShare employers themselves. Partial earnings submitted by claimants will be auto-adjudicated, expediting the payment process. In the coming months, these WorkShare enhancements will help workers be better informed of their responsibilities while on the program. Future enhancements are also planned to refine claimant WorkShare screens through messaging. This will improve how the claimant is guided through the WorkShare claims filing process. In addition, UI Online will be updated to display a message indicating the claimant is on an active WorkShare plan. These enhancements will help DUA staff work more efficiently to identify WorkShare claimants and address any related issues, ultimately to expedite payment of WorkShare benefits. To summarize, this presentation provided an overview of the Massachusetts WorkShare program. We explained that it is a voluntary program for individual states, employers, and employees. We listed the benefits for participants. We outlined some of the details of the WorkShare plan, showed some ways in which it can impact workers, and introduced some of the rules of WorkShare. We also showed how to access online information on mass.gov, and we showed some of the UI Online screens used by employers to apply for WorkShare and to maintain their accounts. Finally, we talked about future enhancements to the program and to related UI Online screens. For detailed information on the WorkShare program, go to http://www.mass.gov/LWD. Look at the left side navigation menu under Key Resources and click Unemployment Insurance. Then click Business Support and then WorkShare, both on the left side. Another way to locate WorkShare information is to go to mass.gov and enter the word WorkShare in the search box that is provided on the upper right corner of the screen. This concludes our presentation about WorkShare. Thank you for taking the time to learn about it.